All right. So, in addition to the market being in utter shambles right now and crypto being in absolute hell, I just took two major losses in my dividend portfolio, you all. So, I am not a happy camper right now. But it's okay. It's going to be all right. If you're new here, welcome to the Money Minds channel where we talk about everything that has to do with money. In the hopes that we can learn, grow, and be better financially tomorrow than we are today. And because I missed my portfolio update this past Sunday, I'm giving a late update to fill you all in on some of the things that's just been happening, some important things that are happening in the market. And as a result, they're happening in my portfolio, and my portfolio has taken a hit. Okay, it has taken a hit. This is a setback for me. Okay, so the last time I gave an update, my monthly dividend income of $24,000. That portfolio was earning a little over $175 a month on average, right? And I was excited because I was inching closer and closer to that $200 benchmark that I had kind of mentally set in my mind, even though 250 is the goal for the year. $200, that benchmark was set in my mind. It's just like another marker to reach, getting closer to that goal. But then, ladies and gentlemen, two, not one, two of my monthly paying dividend stocks took a dividend cut, dropping my portfolio from earning $175 in dividends to around earning 165 or so in dividends. That's right. So I took around a $7 to $8 dividend cut in a matter of about a week and a half. And I'm not gonna lie to you all. Okay, I'm not gonna lie to you all. I was upset about it. I was upset about it. I felt deflated as a dividend investor, and I started to question my strategy going forward. Right now, before I get to what I'm doing in response to the dividend cuts, let me go over the two stocks that were a part of the cut. The first one being PSEC, which, hey, real shocker there, right? Um, Prospect Capital, yet again, has cut their dividend once more. Okay, and they cut it from 0.045 cents to 0.035 cents per share, which took my monthly payout from PSEC from around $47 a month to about $38 a month. So again, a 22% drop in dividends for the stock and about a $8 to $9 cut in monthly dividends for my portfolio. And we'll get to Prospect Capital in a second, okay? The next dividend cut came from a company that I've been investing in pretty heavily over the course of the past year, right? And that company is also a monthly paying dividend stock named Pennant Park. Okay, ticker symbol PFLT. I've done videos about it on this channel. They're still there, they're still up, and yes, I still recommend this company as a dividend investor for my portfolio. I can't recommend it for y'all because that would be financial advice, right? But they cut their own dividend from 0.1025 cents to 0.0833 cents per share, right? So that's almost a 19% cut for the dividend and about a $4.50 cut for my monthly payout. So obviously, losing almost $15 a month in dividends if you combine both cuts, right? If you combine both cuts, that's almost about $15. Obviously that did not make me feel good whatsoever. Okay. It felt like a major setback more than anything. But then I remembered that oftentimes in the market, dividend cuts are taken as a sort of business measure, right? Sort of like an insurance policy to make sure that the future outlook and performance of the underlying asset, in this case, the stock itself, is able to not only meet expectations, but exceed those expectations. Now, that's not always the case, right? Sometimes a cut is indicative of something a little bit more serious that we need to pay attention to, and maybe you need to, reevaluate the stock. But not only that, right? But sometimes the stock market balances the scales, right? These are the things I had to think about. Sometimes the stock market balances the scales and you end up getting dividend raises instead of cuts. So I had to ask myself a question. Has anything that you've known about either of these two companies fundamentally changed with the dividend cuts? Or have they relatively stayed the same? In other words, do you still believe in the value of what you invested in when it comes to Pennant Park, PFLT? Because we already know that PSEC is a massive dividend trap. I've done videos on PSEC. PSEC is a dividend trap. No ifs, ands, or buts about it. But looking at the business model of PFLT, Pennant Park, has anything changed as far as their core principles or their strategy? The answer was no, right? And because the answer is no, although it absolutely sucks that they cut their dividend, I'm not going to panic sell all my shares and overreact in the moment. But if you're new to investing or you're watching this wondering about the unknowns and the possible downside to dividend investing, then let this serve as an example of how predictable or unpredictable the market is, even when you believe that you've really got a really great strategy or a game plan for your portfolio. Things can change literally overnight, you all. Let this serve as an example to you, okay? This is also a good time to mention another key factor that you may want to consider when you're picking out dividend stocks for your portfolio. And that key factor is called the dividend safety rating, okay? Now, the dividend safety rating it is exactly what it sounds like. Okay, it's a number, or it's usually a number or grade assigned to every dividend stock that gives the investor an idea as to how safe or stable that dividend has and will perform going forward in the market. So obviously, stocks that tend to have a poor or lower rating may give the investor cause to pause, because they have to then consider whether or not the potential future dividend cuts will negatively affect their strategy going forward. So I just want you all to be aware that it's not always positive or happy rainbows and sunshine as a dividend investor. You will face challenges on this journey, okay, that may force you to rethink your entire strategy or pivot with your game plan. And that's okay. That's all right. When you've been in the market for years and years and you look up and you've gotten, 10 years under your belt in the market, you come to expect that at some points along this journey, you'll have to make some adjustments and you'll face some turbulence within your portfolio, because that's just part of the game, y'all. That's part of the stock market game. But listen, do not let that discourage you. You cannot allow that to discourage you, because 10 times out of 10, you are still better off taking an L in your dividend account over not having one at all. So for the last few minutes here, I'm going to go over my portfolio, show you what it looks like right now with the 2 dividend cuts, what my overall portfolio looks like, and then we will go from there. One more thing I want to say before we get to that. When you're going over your strategies for your dividend accounts and for your dividend portfolio, it's important to remember that every stock is different, okay? I knew what PSEC was when I invested into it. I knew that it was a dividend trap. I knew that I was buying something that I was only in it for the dividends, okay? Even with them trying to turn the company around, even with the changes that they're making to within the company to try and get it back on track, to try and make it something that is not looked at as negatively as it is now. Even with that, I still understood the underlying asset of what it was I was investing into. So I'm not shocked, right? It's disappointing, but I'm not shocked that PSEC cut their dividend, right? Because I mean, by all metrics and standards, it's a trash stock, right? It's a stock that is continuously continued to lose, to have NAV erosion around surrounding it, and it's continued to perform really badly in the stock market over the course of the last decade, right? So I'm not shocked. All right. Does it impact me in a way to where it caused me to rethink about PSEC? No, because everything I knew about PSEC is just, I knew these things. I expected PSEC to not do so well. Okay. That's not why I invested in PSEC. All right. It was a play purely for the monthly income of it. And now going forward, I have to decide, now that I believe I'm down $500 in the stock, I have to decide going forward if I want to try to ride this back up to some type of stable, or where I, kind of just break even, or if I want to take a loss and sell it and go into something else. But I think right now I'm still getting about $38 a month from PSEC. I'm just going to ride it out. I'm going to ride it out for a little bit longer. I'm going to ride it out and see what happens. Right? Pause. Anyway, let's get to my portfolio. Screen recorder is live. We're going to open up my public investment account, which is where I have my dividend portfolio. Remember, I'm still investing in VOO every single day, you all. Index all the way. All right. So since then, my portfolio has dropped a couple $100. I think the last time I had it up, it was at 24.5 or 24.7. I can't remember. But right now it's sitting at $24,257.87. That's where we're at today. All time, you can see that I dropped from being up. I think the last time I reported on this, I was up 19%, and it has dropped to just under 17%. A lot of that is due to the market. The market is in shambles right now, y'all. So, I mean, a lot of people are taking L's right now in the market. Not everybody. Some people are doing well, depending on what stocks you have in your portfolio. But a lot of people are feeling the impact of the market's performance for the past couple weeks. But anyway, listen, I'm still up 16%, and you can see there. I don't know where that $1.31 buying power came from. Came from somewhere. All right, but I'm gonna open up PSEC and show you right quickly. Okay, so you see PSEC here, sitting at $2.24, and I am down almost $600. I'm down almost 20%. Right, I have over 1,000 shares, and if you go into, you click these three buttons over here. I mean the three dots, and you go to history. You can see, boom, right there, that my last payout was $38.13, which purchased me 17 more shares of PSEC. Okay. And obviously you multiply those 17 shares times 0.035, and that's how much the next payment will increase by, right? But let me get to what my monthly income is. Open up my dividend tracker here. Boom. And we are at 172.09. You saw that number just change like that. So it was at 171, and then it changed to 172. Now listen, I have something in here. Oh my God. This app has ads now, which I can't. Hey, it's a free app. I understand why they do it, because they need money to fund the app. So they're taking advertisement dollars. I get it. It just sucks. But it is still free, so I can't complain too much, right? And then the ads aren't like extremely excessive either. But listen, so I just got a payment from VYM. Okay. Anyway, I got to confirm. Let me confirm. All right, confirm that. Anyway, you see the payment is 172.09. Now, it had dropped down considerably, right? I told y'all that it had dropped down to like 165, 164 or something like that. Since then, though, the reinvestments of my dividends have caused this number to rise back up. Now, I've only put in maybe, I don't know how much money I put in this dividend account since the last time I did a video, but it hasn't been that much at all, you all. So it dropped down to 165, 166, right? But then the reinvesting of my dividends, of all of my dividends, brought it back up to 172. So again, you're seeing the compounding effect take action in a positive way in real time. And this is the purpose, this is the goal of reinvesting all of your dividends, because you don't even realize how impactful it is until you look back in the rearview mirror and say, and then you see all of these investments getting put right back into the stocks, and you're like, wait a minute. Yeah, I'm putting money in every week or every other week or however frequently you do it, right? I'm putting money in, but guess what? I'm also getting money going towards and increasing this dividend portfolio from the reinvestment of all of my dividends. And that is doing major, major work. So listen, this is where we at now, 172. I think going forward, for now, I'm going to stick with this plan. For me, for PFLT, getting back to that pennant part, I think it's a perfect time. I'm going to turn this into a perfect opportunity to buy more shares. That's what it's time for. You know, the fundamentals of business have not changed. The company has not changed. And so I still believe in it. And if I believe in it, then if I was willing to pay $8.50 to $9 to $10 a share for PFLT, well, you best believe that I'm willing to pay $7 for it, right? So now is the time to add equity. Now is the time to buy even more shares than I was willing to buy before. It's the buying zone, y'all. It's the buying opportunity. But listen, I went way over what I was expecting to do here. I expected to try to keep this between 10 and 12 minutes. But listen, if you are on your dividend journey and you're finding out that you're running into roadblocks or something happens in your portfolio and you feel a setback, it's okay. It's going to happen. But maintain the focus. Keep your goal right in front of you. Keep your sights set forward. And I promise you, you're going to come out on top. As long as your entire investment isn't in PSEC. Anyway, thank y'all for watching. Appreciate y'all. Holla at y'all later.